Hey guys, this is Dana D'Angelo with Howard Hanna Real Estate. I'm just welcoming you back to our first time homebuyers group of Western New York. And I'm sitting here with Ross Bowman from First Priority Mortgage. He
Hi, everybody.
is a mortgage consultant and is here to answer a few questions for us about what it's like to get started with a mortgage and the process of getting a mortgage for your first home. So Ross, I was noticing when I work with some first-time home buyers that they're a little bit anxious about talking with a lender and getting a pre-approval. I was just wondering if you could talk to us a little bit about if someone were to sit down with you and get pre-approved or pre-qualified for a mortgage, what does that process look like? What would that entail?
What we want to do is really take 10 or 15 minutes with you to kind of bring someone into the office, to sit down and kind of go over all your information. We need to kind of find out your name, your birth date, where do you work, and what do you do. Another option we can do is, in today's world, anything over the phone, just a few moments too to gather your basic information. We also have a great website through First Priority with Howard Hanna that can, after 5 o'clock on the weekend, we can email you that or even send it to your cell phone to do your application online. The few things we look for are, number one, what's your credit score? We'd like to make sure your credit score is 620 or above. Now, if it happens to be a little bit below that, there are some tools we have and companies we work with where at no charge to you as the customer, we can run all your information through and see what we can do to build up your credit score. Number two thing we always look for is what's your debt to income ratio. What that is, for example, is if you make 30 grand a year, divided by 12 months is about $2,500 a month. We like to make sure that your debt ratio is somewhere below 50%, roughly. What that means is your new mortgage payment, your car, any credit cards are really below $1,200 to $1,250 a month total. Third thing is your job stability. Make sure you have a job, a regular source of monthly income, and you've either been on the job for 2 years or in the same line of work for at least 2 years. And we'd prefer to make sure that you know upfront how much money you really need into the deal. We tell people from day one, you should have at least 10% of the purchase price of the home ready to go, which will cover your down payment, your closing fees, and all taxes and insurance.
Okay, so the main things you're going to go over when someone is coming in for the first time for mortgage information is their debt to income ratio,
Correct.
their credit score,
Correct.
and a job.
Mm-hmm.
And then you're also going to do some counseling with them about how much money they're going to need to have in savings based on the purchase price of the home. Is that correct?
Correct.
I've heard some different terms thrown around, both pre-approval and pre-qualification. Can you talk a little bit about what the difference between those are?
Sure. A pre-qualification is really when you talk to a bank or any type of lender and they kind of go over what's your name, where do you work, what do you do, and they give you some very preliminary numbers. A lot of times the client and the agent will find out that a pre-qualification letter does not mean the credit has been checked and maybe no type of income has been verified. We always want to make sure we can, for the client and for the agent, give you, the customer, a pre-approval letter. A pre-approval means that we've checked your credit and we verified your job and some income or asset. So when you come in or we talk over the phone, we're going to ask you to voluntarily submit to us maybe a W-2, a pay stub, and a bank statement, just so we can verify that you truly indeed made $30,000. You didn't make $27,500. That could be a difference between qualifying and not qualifying. And we'd like to make sure that you have money in the bank ready to go, or if you're going to get a gift from mom and dad or take money out of your 401k or an IRA, that you understand how much you need and where it's going to come from.
Okay, so there's some things they should have prepared, such as a W-2, a pay stub, and any savings account information.
Bank statement, IRA would be great.
Okay, awesome. And you're telling us that there's the pre-approval and the pre-qualification, but the pre-approval is a bit of a stronger document because it means things have been verified. Awesome. Well, thank you, Ross, so much for joining us today. I want to keep this short so you guys can get the information you need. Thanks for joining me in this group. If you have any mortgage questions, please, please, please post them below. I'd love to do some more videos like this and get you guys some more information on mortgages. So I want to hear your questions. And if you found this helpful today and can share it with friends on Facebook or other social media sites, that'd be fantastic. The more people that can join us, the better, so that we can have great conversations and get people the information they need to buy their first home. Thanks,
Sounds good.
Ross.
Thank you.
Bye-bye.